I am broadcasting. I am live. Let me see. There we go. I am posting the episode right now. So I'll wait for folks to join. Oh. Man, this is slow. I may. There we go. Sorry, but I'm just posting this, and a lot of you guys don't tune in at first anyway. So I think Zephin has his alerts on. A couple other people may. AMD. Boy, AMD is gonna take this shit down. I need to put in SOXS. Qualcomm. AMD. Fish gonna. We're gonna take that out, and we're gonna leave in AVGO and NVIDIA, and we're gonna leave our pot stocks in. Yeah, by the way, job numbers. What a shit show. Twitter, and then Tesla, and DraftKings. We have a lot of stocks that I went over today. I'm going to use this. Disney. Back under 100. It's a great one to buy. CVS, do I care about CVS leaving this one in? SLB. Schlumberger. Maybe I said that right. Okay. And what I'm going to do is I'm going to... do I have 16 that I can take out? Nah, you know what I'm going to do? I'm going to take these. Let's see. I'm going to take that out. No scans today, by the way. Nothing popped up for me. So what I'm going to do is tweak that. Then I'm going to tweet something else. I'm going to tweet this. Take these out. And put this in. Sorry guys, that's just so boring, but you get to see the behind the scenes work about trying to get thousands of listens on your podcast. Let's see, copy link. Let's see. I'm gonna put that in. Boom. Tweet. There we go. And I've got notifications, but oh well. Let's see what the notifications are. It's probably Tom. No, Charlie Platt. See, what a fake. Yeah, not financial advice. Zip Charlie. No, I'll report that later. That is a false one. So, hey Jesse. Hey Zephin. Okay, let me pull up my notes so you guys can see. By the way, jobs numbers good. Bad for the market. Okay. I've got some texts from friends. Okay, first thing I talked about, energy is still in play. Carter Worth. Said energy is still in play. LNG. Let's type in LNG. Why is it so slow? What am I running that's... LNG, I said. God, it's... Let me see how... Yeah, it's helping the pot stocks, Jesse, but I haven't been a big believer in pot stocks. As a guy who regularly takes edibles, I say that because I'm at home with my parents. But here's the thing, and anybody that knows pot knows this. So you go to and I'm going to bring this up. Let me turn up the gain on this so you guys can hear. Okay. Anybody that knows pot knows that, no, I don't want 1 month free of YouTube. Anybody that knows pot knows the illegal trade is still going to be there. And so, you saw pot stocks. Let me pull that up. CGC was one. And the only reason I do Canopy, I think Canopy is the biggest one. I haven't done research in a while, but let me see. What do I have? Canopy, CGC, GRWG, MSOS, which is an ETF, and Tilray, TLRY. Those are the big ones. Those are the ones that I typically look at. You can see here, Canopy, you had a cross up here. This, again, these trade, I'll show you. If you want to see why I don't trade in pot stocks, let's pull up a monthly. And so here's the thing on pot stocks. So I live in Atlanta. Yeah, and see, this is 50. Stock is trading 50. It's at $3 right now. I live in Atlanta. Am I going to a dispensary in Atlanta? Yeah, if you're in the business, man, you know this. The taxes are great for the state revenue. If I'm a visitor to Las Vegas, I'm going to a dispensary. If I'm a visitor in Colorado, I'm going to a dispensary. If I am a resident, which these places need to stay in business, I'm probably not going to a dispensary because I can save the 50% in taxes by just going to my local Jesse. And I say that with a joke, but not knowing exactly. But that's kind of where I'm at is, I think, I'm trying to get so my mouth isn't in the shot. There we go. But yeah, look at that. If I bring up TLRY, it's the same kind of thing. You had some cross-ups. I think it's good for the business, but I'd be willing to... here's a good way to think of it, Jesse. I'd be willing to miss out on the first 20% to get the next 100% on legalization. The second that bill is announced for legalization, you'll see a pop. And then as it goes through probably committee and stuff, you'll see it pull back. Pot I'm just not big on. I mean, again, people think it's the next. Take a look, and a good example, read up. Hey, Joe, yeah. Edibles are life. I'm trying to figure out which way to go with that camera. But Jesse and Joe, Google prohibition. Simple as that. Alcohol didn't make money for years until it scaled to size, and Budweiser and Busch and all the legendary brewmasters. When they got to scale in size, that's when it started to make money, and the illegal trade kind of got out of the business. Even moonshine. I mean, fuck. I live in Atlanta. You can go up and get some moonshine in the North Carolina mountains. And it's probably better than what you get here, through your liquor store. But to go back, you guys asked yesterday, is energy still in play? And I brought it up today. Energy is absolutely still in play. Now, would I buy it here? That's where the question really is. Is it too late to buy? And we kind of went over on FinViz yesterday, looking at some of the valuations and how Chevron. And by the way, I think Chevron may be the greatest deal in stocks right now. But that's an if. And the reason I say that is, look at Diamondback. So look at all that confirmation right there. No, ma'am. No, ma'am. Go. Good girl. My dog wanted to play. But look at the confirmation above the 9-day. Sure, it's still in play. The RSI is up at 69. You got a volume shelf here at about 130. You're only at 140. Am I upset if it goes from 140 to 130 and then goes to 160? No. So, yeah, energy's still in play. And when we look at Chevron, the reason why I like Chevron, I heard it this morning. Hold on, I'm going to let my dog out. Okay. There you go. I heard it this morning. If you guys watch the news, you may know the Biden administration is thinking about allowing Venezuelan oil to be sold, or buying Venezuelan oil. Venezuela is different than the U.S. because they can get up and pumping fairly quickly. There's a corrupt government. They're going to drill wherever the hell they want, but they can move this oil rather quickly. Today, I think they're pumping somewhere in the neighborhood of, I think I heard 8,000, 80,000 barrels a day. It's insignificant. It's not a lot. If they were to pump things up, they could actually do 3 million barrels a day, which would cover the OPEC backlog. Now, Chevron is in the position of, if those contracts go in place, Chevron is the company that would get it from Venezuela. So at 161, I don't think it's crazy. I do say under 160, buy it. Over 160, sell it on Chevron. But take a look at Chevron. When we look at the PE at 10, and we look at the dividend at 3.52, year to date, it's only up 37%. Okay? You look at a company like Exxon, and again, you can compare these all you want, the numbers and things. Doesn't mean I know exactly what I'm doing, but the PE is 11. Their dividend is 3.43, but they're up 66% year to date. So I think Chevron probably has more to run. Now, that's just percentages. That doesn't say, okay, what's their market cap? What's their cost? What's their earnings? What's all of that stuff? That's where you really have to go in. But I think Chevron, Exxon, you're 3% off your 52-week high. Chevron, I think you're about 6%, 11% off your 52-week high. What makes me think that's not going to 182? You open up Venezuela? So yeah, you've got opportunities here. Now, my biggest likes in the energy space is Devon, which is only 6% off at 52-week high, but I think it's going to break that. You have a 6.45% dividend. This is in the S&P. This is the largest dividend player in the S&P. You're up 67% year to date. So your PE is 9. It could easily go to 10. It's a well-run company. PDX, PXD, Pioneer Natural Resources. Why do I always do that? I get dyslexic. And by the way, you guys know this. I think the 5 people watching, hit the thumbs up. It helps. Because, we have 7 people watching now. But 9.91% dividend on PXD, it's crazy. The PE is the same as Chevron and Exxon, 10.62. You're 7% off your 52-week high. You're only 51% up this year, year to date. Remember, Exxon is up 66% year to date. So you do want to look at your, your earnings per share, your earnings next year, your earnings per quarter, what the earnings are up. Look at the earnings, up 810% PXD this year. Next year, they're expecting it to be down 12%. And the reason they're expecting it to be down 12% is because it was up 810% this year. As long as you don't go down like by 500%, you're probably still good. Nobody knows what energy is going to do, but that's my take on energy. And Carter Worth last night is saying, hey, LNG with the Cheniere Energy, LNG, they're still in a run, and they're crazy at their 52-week high. But he says they still have, opportunity to buy in. So, I just noticed this. You can chart on FinViz. Interesting. Monthly, weekly. I never knew that. You can do different. Love FinViz. Netflix. I went over Netflix. This is what's crazy. Netflix PE is at 22. They're not growing their subs, so they're probably not a huge growth company. But look at that. Down at 232 there. I think if you get under 230, I think Netflix could be a buy, and that's because they have their ad-supported tier. It's down 60% year to date. There is no dividend, so you're not getting any capital sent back to you. Earnings this year up 81%. Earnings next year only up 7%. What you're going to see over the next 4 months, the next quarter, I should say probably the next 30 to 60 days, is earnings. And earnings, AMD came out last night and brought down their Q3 outlook before they announced earnings. They said that PC demand was down. Stephanie Link, she posted, she went through the AMD earnings, which saw PCs down 53% quarter over quarter, which is huge. Not a surprise. Data center, on the other hand, grew 8% quarter over quarter. And she says that's bullish for Broadcom, AVGO, and NVIDIA. I still don't like NVIDIA, and I'd still buy Qualcomm over NVIDIA. Look at that PE at 43, 29.35. Now, earnings for next year are expected to grow by 32%. I think that's going to come down. You get a 0.12% dividend. This is nothing. But I like Qualcomm because look at 43 PE. Qualcomm's an 11. Plus, you get a 2.39% dividend. They're down 31% this year. Earnings next year are only expected to grow by 3%. But I like this one. I really do. I think this one's good. Let me see. We went over the pot. I'm probably going to cut this one real short, guys. Canopy. I brought up the pot stuff. Fairly big fan. The big thing that you're going to see, there were 3 Fed governors. And so you guys know, this market is just going by the Fed. Whatever the Fed says, hey, we're tightening. We're going to sell assets. The market goes down. Bonds go up. The market goes down. There are bond funds, and maybe I'll do this next week, is you can track, I think it's, let me see, Tom always writes to me on this stuff. Let me look at my notifications. If you guys ever want to see Tom's stuff that he writes to me, you can just go to my @replies or something. TBT and TTT. So I'll bring this up. He always screenshots this stuff for me. This is year to date. The Federal Reserve started raising interest rates. So TTT tracks the 20-year Treasury. Year to date, up 130%. You could have bought TTT. It's a nice ETF for you to buy. At 40. You're at 80 right now. It's going to go up. It's going to continue to go up. I think they want it at like 4.5%. I think it's at like 3 something right now. Here is TBT, which is the 20 plus year Treasury, up 79% year to date. As they started tightening and as they started raising, probably would have been good to buy these ETFs. Even if you bought it there in like the June time frame, and it slid all the way back down here into September, then boom, you're back up to where you bought it and making money. They're going to continue to raise rates, but those are good plays, and you can Google those. They're great to play. But make no doubt about it, the Fed has said any numbers they get, make no difference. They're going to tighten in November. It's probably going to be a 75-point rate increase. I think today's job number increases the likelihood of a 75 rate increase in December as well. By the way, there was one Governor Evans who said yesterday he sees the balance sheet being wound down within 3 years. That's $11 trillion of securities that they will unload on the market. It's going to be a huge amount of pressure. Twitter, the judge said, you know what? We'll drop the lawsuit until October 28th. And after October 28th, if you guys haven't come to an agreement, the lawsuit's back on. So Elon doesn't want that. He's already said, I'll buy it at $54.20. You just have to drop the lawsuit. They still can't come to an agreement. Me selling Twitter at 52 looks like an even better deal. If you're holding Twitter, I would say get out at 49. And Dan Nathan, you know, wow, all pot stocks are way down. Jesse, man, they're down like 10% today because they shot up yesterday after hours. Now everybody's realizing, oh, pot stocks, you know, yeah. Pot stocks reverse gains. That's a big headline. But Twitter, Dan Nathan, I give him credit. On After Hours, he said, listen, do I care about $2 in a stock? $2 means nothing. He said, you're trading at 52. Your absolute top today is 54. If I'm in this stock and I'm making money or I'm actually losing money, I'm selling at 52 because $2 per share means nothing. It's not that big of a percentage. And the likelihood of it going to 54 with some of their private debt is not good. So I bring him a lot of credit for that one. DraftKings. Rumors of a deal with ESPN. I own this one at $44 a share, I think. Let me see. I can look while you guys are here. Fidelity. Did I take a leg down? I didn't take a leg down. I'm down big, by the way, just because. I mean, shit's just down. DraftKings. Let's see. I'm up on DraftKings today, up 3%. Big deal. My purchase price, $41.44. So I like DraftKings. I mean, you know, I'm going to dollar cost average it. I've just been waiting for it to get down to a bottom. I should have dollar cost averaged at 13. Brought that back up. But it's in my brokerage portfolio, so there's tax implications here. But I like that one. The news of, and by the way, if I like that one, part of the monetization of DraftKings will be with ESPN. So Disney's going to be a winner in that one. And Disney's down, I think, today. Yeah, red candle. 97.84. But look at that support level with the volume. Let me pull this back so I can see where the volume indicator actually is. Because I think it's way back here. There it is. Where are we back in April? I'm going to bring it back to March so we can see. Yeah. Look at that volume shelf right there at about 94. Shit, 94 is the place to get in. Look at that. You got double bottoms here. You got tons of bottoms right there. Disney, buy it all day long there. Buy it all freaking day long. Oh, one thing I want to show you is Tesla. As long as we're talking about Disney, not Disney, but Twitter, should have brought up Tesla as well. Tesla trading at 230. I think this one goes back to 205. And I think if it gets back there, you load up on it. So before the split, and I don't remember when the split was, I think it was around here in August. But right around here it was trading at about this level 230 or so. And then you saw it capitulate. My guess is, again, if I can take my kind of line right here, I think 210 to 205 is probably where you're at. Now, there's no volume shelf support whatsoever. Let's see. And remember, you're out of this one. I want to show you on the algorithm. This is what I want to show you before I go to a weekly chart. That's the MACD. It's starting to cross up. And remember, I'm on a 4-hour chart. So it's going to cross up quicker than a daily chart. Because 4 hours, you get 2 candles per day. This is going to move quicker than a daily. So it's going to trigger me more than most algorithms will trick, because I think most algorithms are on a full day. But you've got your earnings coming up, which is a catalyst on October 19th. You've got the RSI down at 24. I think that's going to move down into the teens, to be honest with you. I just think this one is overplayed. And I think Elon, with his Twitter kind of sideshow, people are thinking, hey, he's going to have to sell more Tesla shares. And that's where it's kind of going. But if I go to, I'm going to move to let's move to a weekly. I could move to a daily to kind of look at it, but the weekly will kind of show you. I should get rid of all those earnings and stuff, but let's move in a little bit more. Oh, you know what? I don't want the volume shelf way back there. If you look at this volume shelf, God, don't you wish you had bought it in 2020? Let's move this up here, because this is really where you want to see the volume shelves at. Do you see? Nobody's holding it from back there. There's very few people that are holding it from back there. Everybody seemed, because you had so many splits up here, everybody's holding it up in this level. So you've got support level at this level. And it's going to just continue bounce here. Now 205, 210, I think that's the bottom where you go. Let's move to a daily, because I do think a daily might show you a little bit better than a weekly. Yeah, that volume level doesn't make any sense bad there. Let's pull this back. Gonna pull that back to April. And so these shaded areas over here, those are your volume shelves. And look, we've just kind of broken through this 230, 241 right there. Your Bollinger Bands are coming out. It's trading outside the Bollinger Bands. That MACD is moving down. The RSI is down. At some point, this is moving back up. I think you're moving back up on that one. So I like Tesla, just not here. DRV. I think I explained this to you guys yesterday, but I want to bring it up. Let me know if there's a stock you want me to look at. I'm just going over my notes, but I am going to have to leave pretty soon. Got to drive my parents to go look at furniture in Pennsylvania. DRV is an interesting one because, and I wanted to show you guys this based on my algorithm. I got a question on Twitter yesterday or the day before when I said get out of DRV. I think it was the day before. See that button hook right there? I said, if you're in DRV at 41, it's trading at 73, you've almost doubled your money. Get the hell out. There's DRV kind of button hook right there. You may want to get out. And he said, yeah, but it's up 10% today. And I think I said it on this candle or something. It's up 10%. I may have said it on this candle, actually, October 4th. So it might have been earlier this week. And I said, yeah, it's crossing down. You probably want to get out. The algorithm's going to be close. Well, that moving average right there is bouncing right off that other moving average. My algorithm has 2 moving averages in it where it will not fake you out and get you out too soon. That was one of the problems during COVID I found with the volatility, was with just the MACD cross down, we couldn't get out because it got you out way too soon. And you can see here, if we just look, see that MACD cross down right there? If I just had the MACD cross down, it would have gotten you out. But see that clear run right there where the MACD is above that strike line? And then boom, it just crosses down. Well, you're getting another cross up on it. Would I buy it now? Probably not. I mean, look at that RSI at 69. You could, if you think we're going into another downturn, you could buy it. But hell no, I wouldn't buy it. I mean, there's better places for your money. In fact, one of the better places for your money, in my mind, BOIL becomes an even better buy as it lingers here. I don't know what BOIL's trading for live, but I think it's down today. Yeah, you got a red candle today, 52. I titled the episode yesterday, BOIL and UCO are going for a run. Well, you had to listen to the episode, and I said I like UCO better. You got this little gap down here that you got to go to at about 49. I think you're going to cover that one. And then you bounce it. Look at that gap up there. I mean, as you're floundering down here, I think you've got an opportunity. The RSI is at 37. So I like it. I like BOIL. It just, this 53 is the algorithm buy-in. It hasn't crossed down. It's just kind of been floundering there. The RSI is going down. Might get you out for a little loss here, to be honest with you. But the next cross up, this one, the algorithm gets you only 3%. Buying and holding makes you 45%. You win 40% of the time. 40% of the time. By the way, your average win is 40%. So, I mean, this is based on natural gas futures. If you want to buy a company in natural gas, LNG is your company. I like that one. Let me see what else. AVGO, NG. SOXS. So, with AMD bringing down their guidance, SOXS, SOXs. This is the short. It's a triple levered ETF, short of the semiconductors. This one I think is up 10% today. I don't think the MACD has crossed up yet. Because the semiconductors have been on a run the past few days. Again, this one moves quick. Ugh. Let me see. Can I undo that? Did I just mess up? I did. Let me see. I had to bring this down. There we go. There's the MACD. Look at that cross down. It's nowhere close to crossing up. And because it moves so quick. But take a look at, I want to show you the last run that we had, the short on the semiconductors. It got you out here. Got you in here, August 5th. Got you out here. Look at that. Remember I told you about that button hook? This shit moves quick because it's triple levered. That's at 60. It got you out with a 48% gain. But look at that, 52. There's a pretty big volume shelf. By the way, if we break this volume shelf and close below 51 today, look out below by SOXL because SOXS has support down here at 37. You might say there's support here at 48. But let's see, SOXL. Okay, anybody got any questions? Because I am probably going to go. SOXL. Yeah, look at it, it's down. We don't have a MACD cross up. By the way, I scanned, just so you guys know, I scanned. I couldn't find a damn cross up that I liked. The whole thing. I scanned so many stocks yesterday, this morning. Couldn't find a thing. Let's look at Nike, since I said Nike yesterday. I think Nike at 93. Nike, anything under 90, you buy it all day long. It's at 87 right now. Buy it. This is going to fill that gap back up to 95 at some point. 87. They already, the bad news is already out of Nike. They had their earnings. So bad news will come out of there with all the retail ones. Costco. They announced their sales were up. Costco is one that I like. Let's look at Costco. And then I'm going to go. because I do have to drive my parents to see furniture. $473, buy it all day long. Doesn't have volume support here. They just announced their earnings. Their earnings aren't coming out. There's no catalyst. Buy it $488. It's probably going to get you out with a loss here a little bit. I'd wait until the next one. But at some point, there's a gap up here between 530 and 540. That's going to get filled. Okay. Guys, I did ask this question. One of the things that... Hey, Jesse, that's a great, by the way, suggestion. I always traded with people when I was doing day trading. I would get on FaceTime with buddies who were day trading. And it was funny because one of the guys I trade with, he rather conservative with his money. Super conservative, I should say, with his money. Whereas I'm he taught me that I am fairly aggressive. But it would be funny because, and this was around COVID time, and he and I wrote the algorithm together. I give him more credit on the algorithm than me. I think he came up with a lot of the moving average stuff in the 4-hour chart time frame. But what's interesting was he and I would be trading, and he'd be like, "Hey, I'll put $5,000 into this if you put $5,000 into it." And I'd look at it and I'd say, "Oh, it's moving. I'm putting $20,000 into it," and I'd put $20,000 in, and he'd freak out and yell, and I'd be up, $4,000 or $5,000 within a day. This was momentum trading. This was during COVID. You had tons and tons of swings, and even if you lost on one day, the only thing I lost big on was UCO. I think I wound up losing $50,000 to $80,000 on UCO. His was a little bit larger than me. You looked at it and you said this was April 2020. Barrels of oil were selling for $5 per barrel. Well, it's got to go up. $5 per barrel. They're not making money. They're not pumping. They're not doing anything. Then all of a sudden, oil goes negative. Who would have thought that? And Jesse, if I day traded, I'd day trade with you. At some point, maybe I'll hop on here and do some day trading. We can do it together. When I got more time, I got to drive my parents now to see furniture in Easton, Pennsylvania. This will be fun. Okay, have a great weekend, guys. Remember, hit the thumbs up if you watched. Share the podcast. And honestly, make it more interactive. I don't hear from enough people. I think I hear from about 10 to 15 people a day. I'd like to hear from more. Most of them are just guidance stuff. Like they want me to help guide them. I'm not a financial advisor. I can give you some tips. But I'm not qualified to do this stuff. The only qualification I have is I have a lot of money. So, and I think that qualifies me for some people, but probably not from a professional standpoint. So, okay. Have a great weekend, guys. I hope, my guess is, watch today. Advanced Micro down 10%. Marvel down 7%. DocuSign down 5%. NVIDIA down 5%. Okta down 5%. There's a lot of movement down today. Dow's down 1.5%. NASDAQ's down almost 3%. Oh, I track more closely to the NASDAQ, between the NASDAQ and the S&P. So I'm getting killed today. Hopefully I'll just wind the week up because the past month has been a little hard. I don't take a lot of my advice. If I would have taken my advice, I'd be in DRV. Doubling my money. Again, triple levered ETFs in this volatile market. When you're down 3% and you can buy SQQQ, God, you're making 9% in a day. Tesla's at 228, by the way. I think you're going down to 210 on that one. If we hit 210 on Tesla, I'm buying it. I'm throwing more money than I had in before. DRV was such a good call. Oh, look at that line. Okay, I'm out, guys. Have a great weekend. I am hitting stop.